Hey everyone, welcome back to Corporate Decoder. Today we're diving into Xperi's latest 10K filing. This isn't your typical boring document, it's a peek behind the curtain of this entertainment technology company. We'll decode what their past year looked like, what challenges they foresee, and whether they're setting the stage for a blockbuster future or a potential flop. Did they manage to stay on track, or did unexpected plot twists derail their plans? Let's find out. Xperi, if you don't already know, makes technology that goes into a lot of the entertainment stuff we use every day, from TVs to cars. They're trying to make experiences at home and on the go more immersive and personal. So how did they do last year? First off, this is a Form 10K, which is basically an annual report card that every public company has to file with the Securities and Exchange Commission, the SEC. Think of it as their yearly confession, where they lay bare all their financial and operational details. This report covers the fiscal year that ended on December 31, 2024, so it's fresh data giving us a current snapshot of the company. One key detail: the market value of Xperi's stock held by non-affiliates was around $370.3 million as of June of 2024. This is an important number because it gives us a sense of the company's size and how much investors value it. As of February 10, 2025, there were around 44.4 million shares of Xperi's common stock floating around. This number is important for calculating things like earnings per share, which tells us how profitable the company is on a per-share basis. They're filing an annual report, not just a transition report, meaning they did well enough to keep going instead of closing shop. Transition reports are common when companies are in trouble or changing fundamentally. It notes that some information from their proxy statement, which is basically a document for shareholders about voting on company matters, will be included in this report. This is a way of saying we're not repeating everything, just pointing you to where you can find it. Now, before we get too deep, there's a section called Cautionary Statement regarding forward-looking statements. Basically, Xperi's saying, hey, we're going to make some predictions about the future, but don't hold us to them. A lot can change. They're covering themselves, legally speaking. They use words like expects, anticipates, and plans, which are red flags for predictions that might not come true. The report has a summary of risk factors, which boils down to a simple truth: the company has to do well with making their tech successful. If they can't keep up with the competition, protect their tech, or handle economic challenges, they could be in trouble. In particular, they also see as risks cybersecurity and legal challenges. One of the biggest risks they highlight is their ability to keep innovating. The tech world moves fast, and Xperi needs to keep up. If they can't develop new and improved products, they'll lose out to competitors. Competition is fierce in their industry, with big players like Dolby. Xperi has to constantly invest in innovation and product development to stay in the game. A significant element to their success relies on how successful they are with advertising. There are no guarantees on the path to making money from their solutions. They need to manage their different business areas effectively. Otherwise, they may have to sell of different business units that are not performing. They face serious cybersecurity risks, and if they fail to protect information, it could lead to big problems like legal issues and a damaged reputation. The company is subject to intellectual property claims and litigation that could result in significant costs or the loss of important intellectual property rights. The impact of the economy is a big factor for the company, since if the economy is doing poorly, no one would buy their products or services. They also had to state that the report does not include any restatements due to errors in previous filings. This is good because a yes would lead to a host of questions about why they needed to correct their past reports. Xperi is headquartered in San Jose, California. This is important just to know where the heart of the operation is. In late 2023 and throughout 2024, Xperi strategically slimmed down by selling off some of its businesses. They sold AutoSense, their in-cabin safety business, to Tobii Ab in January 2024. Then, in October 2024, they sold off the majority of assets of Perceive Corporation to Amazon. These moves signal a pivot, focusing the company on entertainment-based solutions. They used to be focused on hardware and software. Consumption of entertainment is changing. People are spending a lot more time streaming. Because of this, Xperi wants to build a media platform to adapt to this change. This allows the company to generate revenue throughout the life cycle of the device, rather than only once at the point of sale. One of the areas they focus on is pay TV, enhancing it by creating an unified media experience. They also want to use artificial intelligence to deliver better user outcomes. They are licensing their audio technologies to consumer electronics companies. A premier audio technology is delivered for recording, delivering, and playback. They are working to provide drivers and passengers with multimedia and entertainment inside of their car through HD radio and DTS auto stage. They are working to connect advertisers and entertainment producers to their audience through TiVo OS and TiVo Stream 4K. They are competing with many companies such as Google, Roku, Dolby, Amazon, and Samsung in all of these different areas of the entertainment sector. To stay competitive, Xperi emphasizes that they need to continue investing in research and development. They've got talent and capabilities all over the world to innovate and create new technologies. The regulatory landscape around AI, machine learning, and automation is rapidly evolving and uncertain, so compliance with these regulations may impose significant operational costs and may limit the development of Xperi. Alright, let's talk numbers. Scrolling down, we see that they have approximately 44.4 million shares of common stock. This is a key number, especially when we start thinking about earnings per share. Revenue came in at $493.7 million. This is for the whole year, and we need to compare it to previous years to see if they're growing or shrinking. Their annual revenues declined by about 5% due to a decrease in revenue in consumer electronics and media platforms, which was offset by an increase in revenue in connected car and pay TV. Okay, diving deeper into their income statement, their net loss is small with only $0.9 million. That's not terrible, but not great either. It would have been better if they profited.